Markets crash and most people panic. Smart money knows where to hide. We'll show you. When markets crash, most people panic. They sell low, chase headlines, and lock in losses. A small group stays calm because their wealth already sits in places built to hold steady when everything else falls. You'll know which assets qualify as safe havens and how to build your own shelter before the next storm hits. Here's the real test for a safe haven. It has to hold its value, or even gain value, while everything around it is falling apart. Not just survive a bad week, not just recover eventually. It has to be the thing people run toward when they're running away from risk. Most of what people call safe doesn't pass that test. A stock everyone already owns isn't safe, it's just popular, and popular things fall together. A house is valuable, but you can't sell a wall in an emergency. Feeling safe and being safe are two very different things. A true safe haven also needs to be liquid. That means you can turn it into usable money quickly, without begging someone to buy it at a fair price. An asset that protects your wealth on paper but takes months to sell isn't protecting you when the crisis is happening right in front of you. With that test in mind, there are 4 classic havens worth knowing: gold, quality bonds, stable cash, and hard assets tied to the real world. Each one protects you differently, and each one has a real trade-off. Let's start with the oldest one of all. Gold has held its purchasing power across collapsing currencies, failed banks, and broken governments for thousands of years. It doesn't answer to any single country or company. When trust in paper promises breaks down, gold has repeatedly been the asset people turn back to, because it never needed anyone's trust to begin with. Gold works because it's scarce, it's physical, and it isn't anyone's debt. A bond can default, a currency can be printed into nothing. Gold sitting in a vault doesn't depend on a promise being kept. That's what makes it insurance, not a bet on someone else's success. But gold has a real cost. It pays no interest, no dividend, nothing while you hold it. Storing and insuring it costs money too. And in the short term, its price can swing hard on rumors and sentiment. Gold protects your wealth, it doesn't grow it. That's the deal. So think of gold like a fire extinguisher, not a paycheck. You don't buy it hoping to use it constantly. You buy a modest amount and hope you rarely need it. But the next haven on this list can actually pay you while it protects you. A high-quality bond is simply a loan to a strong government or a rock-solid institution. In exchange for lending your money, you get regular interest payments and your principal back at the end. When fear spikes, money often floods into these bonds first, because getting a promised return back feels safer than chasing growth. During a crisis, bond prices for the strongest borrowers can actually rise, even as stocks fall. Investors are willing to accept a lower return just for the certainty of getting their money back. That flight to safety is exactly why quality bonds sit in nearly every calm investor's shelter. But here's the trade-off. Not every bond is safe. A bond from a shaky borrower can crash right alongside everything else, because the fear is that they won't pay you back at all. And even strong bonds lose real value if inflation runs hotter than the interest they pay you. Here's the part most people get backwards, and it's coming up soon. They wait until the crisis already hit to go looking for safety, which means they buy protection at the worst possible price. The real shelter gets built quietly, before anyone else is worried. Stick around, because the last haven ties this whole plan together. The third haven is boring, and that's exactly the point. Stable cash and cash-like holdings, such as short-term government bills, don't chase returns. Their job is to sit there, untouched, ready to move the moment you need them. In a crisis, having dry powder is its own kind of wealth. Here's what most people miss about cash. Its real power shows up after the crash, not during it. When quality assets go on sale because everyone else is panicking, the person holding stable cash is the one who can actually buy them. Cash isn't just safety, it's optionality. The trade-off is simple. Cash sitting idle for years slowly loses purchasing power to rising prices. It's a shelter for the storm, not a place to live forever. Keep enough to move fast, but don't mistake stability for growth. The fourth haven is hard assets, things tied directly to the physical world. Productive farmland, income-generating property, and essential raw materials all hold real value because people always need food, shelter, and resources, no matter what's happening in the markets. Hard assets hold up because their value comes from usefulness, not sentiment. A field grows crops whether the market is calm or chaotic. A rental property still houses a family. That real-world utility is what keeps demand steady when confidence in paper assets disappears. The trade-off here is effort and access. Hard assets usually need real capital to buy, ongoing management, and they aren't quick to sell in an emergency. They're a powerful long-term anchor, but they're not the piece of your shelter you lean on for next week's expenses. Now, here's the mistake we promised to unpack. Most people only start looking for safe havens after the damage is already visible, when gold has spiked, when panic has already priced in the fear. Buying safety at the peak of fear is expensive safety. The calm investors bought their shelter long before the storm was even in the forecast. The real skill isn't predicting the next crash. It's holding a mix of these havens quietly all the time, so you're never scrambling. A little gold for insurance, some quality bonds for stability, enough stable cash for opportunity. A hard asset or two is a long-term anchor. Balance beats prediction every time. No single haven covers every kind of crisis. Gold might lag when rates spike. Bonds can wobble if inflation runs hot. Cash quietly loses ground over time. But together, spread across all four, they cover each other's weak spots. That overlap is what turns a pile of assets into an actual shelter. So here's what to actually do with this. Look at what you own right now and ask which pieces would rise, or at least hold firm if everything else fell tomorrow. If the honest answer is none of it, that's your starting point, not a reason to panic. Gold, quality bonds, stable cash, and hard assets, that's the shelter smart money quietly builds before the storm, not during it. This video is educational only, not personal financial advice. So always think it through for your own situation. Which haven do you already hold? Gold or cash? Subscribe, and I'll walk you through building each piece step by step.